All right. Thanks so much for that. Now, let me welcome in Ashwini Kumar, who's joining us this morning, MD and CEO of SBI Cards. Lots to discuss with him. Mr. Kumar, it's our maiden interaction. Thanks so much for joining us here on ET Now. And, it has been a slightly bumpy quarter for the company. Has there been some kind of a mass issue with the credit card bill repayments? Is that really what skewed things for you this quarter?
So credit card is also a part of the same Indian economy which is facing headwinds due to COVID, and therefore the stress had to show at some point of time. As we are all aware that the June quarter for most of us, we had the moratorium, and therefore there was a standstill in demand. And after that, September for us was different than the rest of the industry, because for us, most of the customers did not opt in for the second moratorium. So our stress has shown up earlier, and this is something which is there in September, and it is not as if the operations have suddenly become stressful or something. It is just the COVID stress which is showing up, and this will wash over in the next couple of quarters. Our inherent business model remains very strong, as is shown by the 37% growth in the pre-provision operating profit. And the new sourcing which we are doing on a daily basis has almost reached the pre-COVID levels. The spends have picked up quite significantly. So if you look at spends, new sourcing, the way we are expanding, partnering with other brands, our business operations are almost back to normal. But this stress which is there definitely has to show up and will have to be overcome, and which is what we are doing.
So why has the company taken such aggressive provisions in that case? Is there an indication of how much is likely to go bad?
You see, our GNPA numbers used to be in the range of around 2.5% or slightly above that in the pre-COVID levels. So therefore, if you look at June number of 1.35%, that was way below even our traditional numbers. So that catch-up had to happen. And so part of the reason is this catch-up, that in our normal circumstances also we were 2.5 and now 1.35, there was a big gap. That is one reason. And the second is, yes, there was the COVID stress. And this COVID stress we have provided. We have not waited for the court to allow us to declare NPLs. We have by ourselves provided for them, even as if they were NPLs on the date. So we have been very prudent. We have been slightly aggressive, you could call that. But I would rather be safe than having to provide later and having to explain again that how did we not provide earlier. So that is a combination of prudency and also a combination of being taking the provisions upfront rather than later. So that's where we are. Credit card, actually being an unsecured product, is more susceptible to stresses, and they go away easily also. Once the economy starts to recover, we'll see that most of this stress will go. One data point I would like to share with your viewers, 54% of all the stressed segment which we have currently had paid all their credit card bills in the previous 24 months, which means they were good customers for us. So therefore, it is not as if suddenly people have stopped paying. It is basically a result of the situation due to COVID and the resultant impact on economy. And therefore, we are covering ourselves by providing earlier and providing aggressively.
Sure. Could you also give us an outlook on how the average spends have been? Where is it that you stand in relation to last year? And are we still seeing a climb up, or would you say that we've topped off?
So there are 3 or 4 major trends. One is that the spends have been coming back on, and we have almost reached 90%, 92% of the pre-COVID levels. And if you compare with Q1, where we were around 80%, this is really a big jump. And we are sure that with the huge sales and the huge spends we have seen in October, we had a tie-up with Flipkart for the billion-day sale, and which saw huge traction. I mean, we almost did double of what we did last year. So therefore, in the Q3, this should be back to normal or maybe even exceed the pre-COVID levels. So that is where the spend stand. Now we have to be mindful of the fact that there are still categories like aviation, entertainment, the dining out. All of these categories are still not back to normal. They're way below. So therefore, this spends which have been happening is a result of the online spends. Online spends in Q2 are already 114% of what they were in the pre-COVID levels, and the offline, which is the POS, that also came back on, but it is still around 75 to 80%. So that is still lower than what it was in pre-COVID. But online has more or less made up for it. And this trend of expenses shifting online, I think, is a secular trend. Even if situation were to normalize fully, I don't think it's going to go away. So therefore, we will see this online spends increasing more and more. The categories we see in the online space, especially, which are more active, started out with staples like groceries and also immediate things like utilities. People were paying their electricity bills, their insurance premiums, their school fees. All of these were categories which were not necessarily online earlier. So they are a steady and a big part of the spend trend we see today. In addition to this, OTT platforms, because a lot of people were at home watching the entertainment channels, so they also came up. In the months starting from August, when we had the Freedom Day sale, we also saw a lot of spends happening in electronics. So this, I think, was a lot of pent-up demand. So a lot of mobile phones, even big ticket items like refrigerators and TVs, all of them have seen sales. And in the October period, which I mentioned, these sales have again picked up. So therefore, the category of the spends has shifted a little. The regular categories, which were a big part of our spends, like aviation, the air travel, the entertainment, which means theaters, all of that is still not normal. That is still very low compared to what we were at pre-COVID. But other categories are more or less made up. And at 92%, especially in September, I think we are in a good place. Seeing what has happened in October, by Q3, we should be ahead of what we were in pre-COVID levels.
Sure. So what's the conclusive outlook then on asset quality?
Yeah, so normally we don't give any numbers guidance because we are a listed company, but this year is affected by coronavirus and the economy is still recovering. So I wouldn't say that this one quarter is just a one-off and the problem is entirely gone away. As you see, there is a stressed book, and this stressed book will be resolved going forward. We have enrolled significant numbers in the RBI restructuring scheme. Now, while that is a stressed book, how this is going to behave, we are not sure. We are seeing a lot of first installment payments coming through, but whether they will hold this for the next 1 year or 2 years, which is the time frame for this scheme, we are not sure. So therefore, much as we wish that this could have been just a one-off quarter, in my sense, for this year, which is the next 2 quarters at least, we will continue to have some stress. The next year onwards will be totally good, because for credit cards, the unique thing is that if something becomes NPL and we don't recover it, we will clearly, we will have to write it off and get rid of it in 8 months. So that's a very unique feature to the credit card industry. So we have to either deal with it, recover it, or take that hit. So that's where we stand. So I think for us, this year is going to be a difficult year, but the next year onwards, because our inherent business model is so strong, I think we'll be very good and we'll come back very strong. All our parameters of sourcing and spends, etc., all coming back to normal, and they will increase. So I think we'll be in a very good place next year onwards.
Mr. Kumar, thank you so much for taking time out and joining in, giving us a sense as to what the outlook is on SBI cards, as well as what the road ahead looks like.